we have Praj Industries, which saw its top line and this profit fall by as much as 9 and 7% respectively in the third quarter. However, it's expanded due to lower raw materials costs. Let's discuss this quarter gone by and the road ahead with Shishir Joshipura, the MD and CEO of Praj Industries. Shishir, good afternoon. Thanks for taking the time out. Can you tell us about the assessment that you have had for this particular quarter and all the ins and outs?
Yes, good afternoon. So this has been a quarter which has, and on an external environment front, of course, we've seen very challenging dimensions on the economic side. Having said that, what was important is also, we saw that the speed of the finalizations and decision making in the market had undergone a change, and only towards the end of the quarter it started to come back to normal. It was slowed down, but it started to come back to normal. And we are, as we see things, we think that going forward in the current quarter, that is the quarter 4 of the financial year, and the future quarters, we remain confident, reasonably confident that the execution speed will pick up, as well as the decision-making speed will also return to normalcy.
Sir, could you give us a sense with regard to order inflow now for the first 9 months, how that's been vis-a-vis last year, and are you seeing any sort of pickup there as well when it comes to order inflow?
So we have an order book now which is at about 1,100 crores for as we move into the quarter 4. And we are seeing a traction building on the inquiries, and as I was mentioning earlier that there was some kind of a slowness that is kept in terms of extended cycles for decision making on account of different factors, economy slowing down, some decisions getting delayed on credit disbursal, etc. But we see that trend now coming back to normal, and we expect that things will change for good as we move forward.
Okay, Shashi, can you also give us an idea about how you expect to see operating margins going forward? A little bit of an outlook based on the kind of traction that you've seen right now?
I'm sorry, we're not able to give any guidance on the forward margins. As I was mentioning to you, our order book is healthy, and we expect continued positive development in the business.
What do you make of the recent announcement that have come by? For example, Cabinet has declared that there will be no separate environmental clearance which is required for sugar mills in order to produce additional ethanol from B-heavy molasses. What sort of an impact does it have on a company like yours? And if you could tell us, within this ethanol space, what sort of an opportunity do you guys see?
Yes. So, this decision around the fact that if you switch your feedstock from molasses C to molasses B, and therefore you have increased production for ethanol, since it does not leave an environmental footprint, the clearance is automatic, which earlier was not the case. So if you want to switch feedstock, which means if you want to even go for a brownfield kind of an expansion, you have to go through a whole process of environmental clearance, which was delaying the whole process. That's no longer the case. With these clearances, even the CPG projects going to white zone category, which means no environmental clearance required. That would mean that the decision cycles will shorten. That is what I was mentioning earlier, that we expect them to come back to normal very soon.
I'm just going by the press release of the company. The last time the OMCs had floated an order for ethanol, there was a supply gap. For example, they floated an order for 511 and they received supply of only 156. Recently, once again, now they floated a second tender of 253 crore. The time period for that is between 1st February to 30th November. Tell us what sort of participation or what sort of supply can Praj Industries provide in this sort of tender?
So let me clarify. So we don't make ethanol. We have technology and engineering capabilities and manufacturing capabilities that allow us to put up plants that make ethanol. So if there's a continuous gap between demand, which is, as you rightly surmised, on the higher side at 5 million per litre, and supply being at the lower side on 167, and then now the next tender 253, I think the supply and demand gap actually means that there is a lot more demand for the end product compared to the supply today, and that means that a lot more new capacity needs to get created, and that is where Praj will have a place.
Okay.
Okay, Shashi, can you tell us a little more about in your press release, again, you do mention that there has been some pressure with respect to the economy, the macros as a whole. What is your anticipation with respect to the upcoming few quarters, and whether or not you do expect at some sort of improvement with respect to business, especially when you cling on to the macros?
So, as I was mentioning, that we are living in a challenging economic environment where obviously the demand on risk mitigation, which are arising out of factors beyond most normal business areas, the whole policy dimensions that intervene, the globalization impact, coronavirus, for example, just now, what is the impact of it? So there are factors which are beyond one's normal business areas, and as I mentioned, that it is now likely to, it is making a more robust project appraisal, relatively speaking, and that is the phenomenon that we observe in the marketplace. Having said that, I think what's more important is also a huge gap between the demand and supply, especially in India, between the demand for ethanol and the supply. That creates a big opportunity for us. So we believe that the tailwinds will definitely outweigh the headwinds, and so it will be a net tailwind for our business, and as we go forward, it will only develop positively.
Right. Just to get a sense, since you mentioned about coronavirus, and of course you guys do export as well, by any chance will these factors have an impact on your export business in the current quarter?
No, for us, China is not a market, nor Hong Kong, which are the two most affected places. For us, majority of our markets are, of course, Southeast Asia in terms of Thailand and Philippines, but on the other hand, Africa, South America, so not much connection to our business or export markets. Okay. What I meant was that if this continues for a period of time, then I have to see the changes that would incur on the globalization side in terms of the steel. China is a major steel producer. There are supply chains that are dependent on Chinese supply. So we'll have to see how the impact actually goes out.
And the current revenue split of about 30 to 70% between export and domestic revenues, do you see this ratio remaining same, or do you expect the share of export revenue to go higher in FY21?
No, so it's range bound, so it will be very similar to what it is right now. What I want to make a point here is that India has had a very, very favorable policy environment, so that's really pushing the capacity creation in the country. So to keep the same ratio, obviously you run even faster in the international market, and that is what we are doing.
Shishir, I know that at this point in time, the purifying segment does not contribute to as much in terms of revenues, but we did want to understand the scope of this particular business, and that whether it could actually involve a lot more eventually over the next, couple of years.
Did you mean high purity business?
Correct.
Sorry, am I correct in understanding asking our high purity business?
That's correct. Yes, I want to get an idea and the outlook of whether or not we can eventually see much more business coming in over the next couple of years, and whether it could actually contribute to a lot more than just 7% from what I understand in terms of total revenues.
So high purity business is very focused business on the pharmaceutical vertical. So all their products and services are meant to serve pharma industries, both biopharma and conventional pharma. And I think so in many ways, what happens to them is also tied up to the fact on two dimensions. One, how much of manufacturing capacity gets built in the country and or in their chosen markets around biopharma and pharma spaces. But also that's one dimension, which is the market dimension. The second is our own, in terms of how we can develop products and services that can go deeper and to a higher share of wallet from the same customer. So both of these will have to have an interplay, and we expect that both of them will move positively.
Okay, Shishir, we leave it on that note. Appreciate you joining us today and taking us through the quarter gone by. That's the management of Praj Industries.